Okay, class, good morning.
Good morning,
So,
sir.
yes, it's
Good
already
morning, sir.
10:30. Yeah. So let's start our revision for today. So the first thing we would do is we're going to scan through some past questions just for us to have a feel of what ICANN has been asking so far, which of course I believe that most of you will have done. So I just want us to do it together. Just let us look at it together. Then I will then solve with you some of those questions, at least the most recent one. We'll see how far we can go um, until we are tired, and then we'll stop. But it's not going to be a very long class, but it's going to be a very exam-focused class. And another thing that we would have to also look at today is ethics. Ethics. So in recent diets, it has been a recurring part of your syllabus that I can keep asking every diet. So I would probably start with that first before we start solving those other questions in this past question. And so today, majorly, is just for us to solve past questions together. That's what we're going to do today. So, and I believe that the one we solved yesterday, was it yesterday or Friday? Yeah, we did two questions on statement of cash flows on Friday. I want to assume that every one of you have actually sat down to solve that question yourselves again. And probably maybe you have solved more. As you would see, I mean, it's likely that statement of cash flows, you'll find it in your exam again. So it's an option that you should keep open. It's something that you should do in the exam because you can easily pick points on them. So let's start with I want us to review six diets together now. We'll just scan through it and see what they have been asking in those diets. So we'll look at 22, 23, and 24 together. So let me start with May 2022. I'm sure you can all see my screen very clear.
Yes, please.
Okay, good. Okay, so if you look at May 2022 diets, the question one was on published accounts. Was on published accounts. I'm not sure. Did we solve this in class? No, we did not. Was on published accounts. Now, the second one was on IAS 8 accounting policies. Now, this accounting policy, aside published, right, is another part of your syllabus that we need to revise very well. We need to revise. So I will find time to, if you can revise a few questions on it today, we'll do that because as you will see, it's like they ask it every other diet. They don't ask this diet, they'll ask the next. So it's something you might likely find. IAS 8 asking you to define power period errors, accounting policies, and all of that. And yeah, the C part is about PPE. PPE majorly. So PPE. Then question 3, group account. I'm sure by now, every one of you know that group account is very important, but it's going to come in like an optional question. So you could choose to do it. If you are very good at it, you do it. If you are not, you probably will just look for other options for you to do. And question 4 was on cash flows. So cash flows comes out almost every day. It's statement of cash flows. So you know by now that section B is you're answering, nobody is saying you should answer all the 3 in section B. You're answering just 2 out of 3. So, and looking at this 2002, they are not very easy questions. I mean, look at it. I would have probably gone for question 2 if I were you, because of the spread of marks. This is 3, and it's just definitions. This is also 8 marks, and it's saying that I should distinguish between changing accounting policies and changing accounting estimates. You would likely get a lot of marks in questions like this if you know it. So we'll still come back at it. Then C is just talking about preparing, and it's 9 marks. So I probably would have risked this. And maybe if I'm very good at group accounts, this question 3, but this one might take you a lot of time to finish up, looking at the additional information and all. Then the question 4, cash flows. I probably will have gone for cash flows also. I mean, 10, it depends on you. For me, I will have gone for question 2 and question 4. Some people will have gone. So if you're very good with cash flows, always go for it. If you're very good at it, because be sure you're going to pick out of the 20 marks. You might be doing almost 15, 16 over 20. If you're able to look at it systematically, and this one is talking about indirect method. So yeah, so I'm sure most of you should have solved it. And there's even another free one. And I like questions like this that explain the term cash and cash equivalents and list 3 examples. I mean, cash and cash equivalents are like financial assets that can be easily converted to cash, or that are highly liquid items. Your bank balance, your cash balance, your bank overdraft, your fixed deposits, short-term investments, all of those. So 3 marks for you. So section C, right, which is 30 marks here. This diet, they asked you IFRS 15, and it's just definitions, nothing special. And taught you everything here. It's what you already are familiar with. So I'll have probably advise students to go for things like this. So one of the revisions I will still do with you is one day during the week, I will revise all those standards with you. I will just summarize everything. IS 16, I'll summarize the main point. IS 38, I'll summarize the main points. Everything. And you need to have an idea of a global idea of all of those standards, so that when you see a question like this, you don't run from it. You go to it and probably pick out of these 15 marks, you'll be picking like minimum of 10. They're very simple questions. And again, question 6, this one, qualitative characteristics. The objective, I mean, what's this one? Yeah, objective of FRCM. These are questions you should do. Financial capital maintenance, physical capital maintenance. I'm sure a lot of you have forgotten conceptual framework and regulatory framework. Those were the topics, those were the first topics I did. Please, if you have forgotten, just that recently they have not been asking it regularly like that. The voice is mute. Can you
We
hear me,
can hear
please?
you. Yes, we can hear you.
We can hear you.
Yes.
Okay, good. Okay, so a lot of you might have forgotten conceptual and regulatory framework. Please, I beg of you, go and revise it. Because when I see questions like this, I always believe that should be your go-to in the exam. all these theory questions, they make it easy for you to pass. Imagine this section C, just do number 5 and number 6. That one you are sure, if you know it, that out of the 30 marks, you get 20. You are sure. But if you don't know it, you don't know it. There's nothing you can do about it. And these are all the things that are in, this question 7, even this is ratio anyways. But I'll just leave it for them anyway. Because it's much, that's the penalty you will pay for not reading all this theoretical part of your syllabus. You will now be left with questions like this. It's simple, but it's more technical, right? It's talking about ratio. You're going to draft a report, meaning you're going to analyze the ratio and all of that. And this was the diet where they asked one ratio that students have not even seen before. Cost of sales ratio. Well, but most of you would be familiar with it. I think I mentioned it in class now. And also earnings yield. So now these are the two ratios they want them to compute. It's simple. Then analyze the report. So this May 2022 diet, there was published accounts, there was accounting policies, PP, group account, cash flows, revenue, conceptual framework, and all. Now, in your exams, right? Ideally, a 20 marks question would take you 36 minutes to finish up. Maximum. If you are spending more than 36 minutes in a 20 marks question, that's not good. That's not good because that means you're wasting time. You are eating into other questions time. Don't ever spend more than 36 minutes on a 20 marks question. It becomes a problem for you because you will not have time. And the nature of ICANN exam is that you must ensure you touch the 5 questions. You have to, in all your courses, it's important that you do that. So that means section B alone will take you around 1 hour, 15 minutes. Then section C, which are 15 marks question, that's around 20 something minutes, 24 minutes or thereabout. So section B and section C is like 2 hours of the exam. And the reality is that in that 2 hours, you should have passed this exam. You should have passed. In the first 2 hours of the exam, you should have passed. If you haven't, it becomes a problem. So, and section B and section C, if you do section B and section C alone, you should pass because section B, that 40 marks, worst case, you should be getting like 27. A good student will get 35, right? Or more. But an average student that is going to go through what we'll be looking at together this week, minimum that you will get is like 25 over 40, which is not good, at all, but minimum. While the other part, which is the 30 marks, that section C is always easy for you because you see them asking theoretical questions, define, explain, all of those theory part of your syllabus. So you can easily do 25 over 30 there. Or worst case, 20 over 30. Like you are doing like 10 over 15, 10 over 15 like that. Then you're having 20 over 30. So that leaves you in a position where you have not passed because you'll be having 45. So your lifeline then remains on question 1, which you have to ensure you do very well. Okay. If you look at November 2022, the first question for that diet was not the regular published. This diet, they asked ratio from our students, not just ratio. This was the first diet they were asking about blockchain. Yeah. They're asking our student about blockchain technology. Sure, which I think something we would also need to briefly look at. They might ask it, they might not. They have only asked it twice from this period onward. So, this should not be anything. Even if you don't know what blockchain and all of that is, which you're going to know anyway, this A and B, these 20 marks should have earned you like close to 15 over 20. So that means you have to be ratio is not something you have to joke with. You have to know it. Any type of ratio. You need to have solved everything. And there is nothing new in ratio. It's things we have seen before. We'll come back at that. So ratio, question 2 was on consolidated. Cash flow again. So every diet we have cash flow, statement of cash flows. Then question 3, yeah, was on group accounts. Group accounts. Question 4, conceptual framework. This was regulatory framework. So you have to go and read this. And question 4 also dealt with financial instruments. There's financial instruments there as well. That's section B. So I think this is, I think this is a little tougher than, so a good student will have done question 2, cash flows. So go and practice that cash flow, I don't know, so that you'll be in a very comfortable position. And if you know your group very well, since they ask it almost every diet, and yeah, I will have gone for 2 and 4. That will make me comfortable because I'll be able to get comfortably over 30 in the exam on these 2. Like this one, this C, 2 classes of financial asset, I know I'll get my 4 marks. This one, amortized cost, amortization schedule, I know I'll get my 8 marks. So if I might do C and D first. Now, this one is even easier. So this 20, I might get 20 over 20. I'm speaking for an average student that have look at this. And if you are good with group, just do it. But the cash flow also, you can also do very well there. Now, the C part, theory. So this is ethics. This is talking about ethics. Then conditions for capitalization of determination of useful life of an asset, like that. Then EPS, yes. EPS has been very constant. I hope you guys, your EPS is solid. It has to be. Those are the things you need to ensure that you're solid on EPS. And anytime they ask EPS, they will ask you advantages and limitations of EPS. Just go and know that one. Whether they ask it or not, just know it. Advantages and limitations of EPS. And know EPS very well. So since we started this, our revision, I've emphasized on majorly on cash flows, because based on what we have done so far, today we'll advance. So, and please go and master cash flows. Another one is ratio and EPS. Go and master those 2. Solve everything that you have to solve. And all this conceptual framework thing, you will see, question 7 is all about conceptual framework. And that diet, these 3 basic steps in application of business model test was a very funny question, that diet. So we'll look at it and see how you would have scaled through it. For me, probably I will have run away from this question because of this particular one. If I'm unable to develop a comfortable solution for it. So, and this one is not even looking any friendly. But if I'm very good at EPS, why not? I will have done it. But it was not a very simple EPS. So I'll still run back to this guy. This question 7 that I had, while ultimately relying on this. So this November 2022 is a much more difficult question, a much more difficult diet than November 2023. So, and you can see it's still familiar terrain, asking ratio, he asks cash flows, group accounts, EPS, IES 38, financial instruments. Those are the things we need to ensure that we really revise before the exam. Now, in 2023, So now we have published. This was the longest published they have asked. That it has 10 additional information. So probably review it. And there was even a B part. They made it 24 marks, not even 30 marks, 24. The B, they now ask something that you should explain EPS and OC, explain it. Not only that, though, and I said, highlight the limitations of each of them. So one thing we need to also master is not just these ratios, not just the computation. You need to understand generally limitation of ratios, generally. So when they ask you limitation of any of these ratios, the limitation of ratio, the general limitation, you can apply it to when they ask you, okay, what's the limitation of OC? What's the limitation of EPS? You'll be able to apply it to each of them. So it's something we need to also look at. Now, again, conceptual framework. So if you haven't read conceptual framework, probably maybe because of what we are looking at now, maybe you should just go and read it today, because then I will still do like a high-level summary for you on it, but go and just read it. From what we have seen now, back to back, 3 diets is there. Back to back is there. Now, this was the first time we're seeing this for our students, right? 5 issues which must be contained in a director's report. Even these diets, I mean, I'm sure I didn't talk about it. But director's report is, you will always find it in an annual report, in a published financial statement. Is there. Is there. We spent all our time looking at standards, but I mean, I can ask them that director's report. So usually a director's report is majorly talking about um, the external environment of a business, and also their internal environment. It's just a brief description of the company, what is happening to the company. So that's where they will talk about their principal activities. That's when they will talk about their human resource policies. They will talk about, in fact, the directors and their interest in the company. They will talk about the training for their staff. They'll talk about the performance highlights. They'll talk about the macroeconomic environment. They'll talk about events after the reporting date. They'll talk about what they do for those that are disabled. They will talk about equality they will talk about a lot of things within the organization. So as many as you can think about, in case they ask you something like that, you're just talking about the company. Okay. So this C part was talking about tax, income tax is another thing I have in a bucket that I want you guys to really be an expert in. Because it's very easy, these taxes, but the fact that it's coming at 5 marks, because they know it's easy. This is why they are giving it it's so straightforward income when it comes to calculation of deferred tax. So hopefully you'll be able to look at some questions on it. But from this diet 2023, they started asking it like frequently, even up to last diet. Did they? I'm not sure. We'll look at it. So yeah, group account comes out every diet, but optional. If you are very good at it, is something I would advise you to do, because it's also very easy if you're very good at it. If you are not, don't just go. Do the easier alternative. Okay. So question 4 was also on deferred tax. So this diet, 2 questions on deferred tax for you. So this section B here wasn't looking friendly at all. this one, the question 2 here, conceptual framework, then diff attacks. Question 3, diff attacks. Then question 3, group accounts. Question 4, diff attacks. Then the C part, financial instruments. Financial instruments. Very easy one. Then asking you to do amortization schedule. So I hope you all still remember that amortization schedule I taught you in class. It's something you need to, that will try and look at and get used to it, because every diet that they want to ask you about financial instruments, they're always asking it as a standalone question for 5 marks or for 7 marks. So it's something you need to know, and it's so easy, right? If you know it anyways. Hopefully we'll be able to do those 2 questions they have asked so far on it. Then classes of financial assets, amortized cost, fair value to P&L, fair value to. But this, yeah, fair value to P&L and fair value to OCR. Then define this and this. Okay. Okay, so IES2, we did not look at IES2, right? So maybe we can use this to revise it. This has been the only diet they have asked it so far. Who says they can't ask it again? So this diet actually looks at majorly what you need to know around it. So the other thing you find on IES2 will be in published. And I think it was a question like that where there was a damaged inventory, and we ultimately valued that inventory at the lower of cost and net realizable value. That like that. So inventory, if you can know this, I'm sure you are just okay for inventory. You know the perpetual inventory system and that. And maybe the inventory method or the valuation method for inventory, weighted average, FIFO. You just need to understand in case. Then this diet, again, they asked about blockchain technology. Blockchain technology. Then again, conceptual framework again. Then PP. So for me now, even looking at this alone, if you want to, from these 3 diets, if I was writing November 2020, let's say this is May, and I'm preparing for November, from those 3 diets I have seen, I mean, you know that, one, I need to know cash flows very well, know it, be ready for it. I know that I need to know ratios very well. I know that I need to know conceptual framework and regulatory framework very well. I know that I need to go and read group accounts, because since it comes out, and there are some standards that they ask fancy things on, like IS 16, even EPS. I've already categorized that as part of ratios. All of those and this financial instrument. And I know that they focus on the definitions and that how to calculate amortization schedule. I know I will know those ones very well, and I'm sure I will pass. So let's assume those were the only things I read, and I got into the exam. Let's see what I will find. In November 2023, yeah, as God will have it, I saw published for 25 marks. I will have practiced all of those questions. And all this additional information, I will see that there is nothing new. It's similar to what I've seen before: issue of shares, investment properties, loan notes, inventory, tax, and calculating depreciation. Okay, I know I'll be able to have a go on this. And the B part was talking about ethics. So I would know, that's the first thing I would discuss. Now, question 2, ratio. Okay, I should be able to attempt this in the exam for that diet. Question 3, IES 40, investment property. So for me to have revised PP IES 38, I probably will have a good idea of investment property as well. I mean, the faintest of idea. So I'll just try my best and see what I can do here. Then EPS. You should really master EPS. And I told you every diet, alternative measure for EPS. Okay. Calculate basic and diluted. Explain the purpose of diluted and 3 types of dilution. Okay. If you had revised, you should be able to do that. Then question 5, income tax, which is the C part. Income tax. And C, yeah. So this was a new area. 4 techniques for creative accounting. Probably maybe I wouldn't have read this. I will just, if I'm going to answer this in that exam, it will have just been native knowledge. Non-financial information, the same thing. Areas where technology is required. So this question 6 is just, if I don't have a choice on anyone, that's when you will find me here. And you only find me here if I don't know this question 5. I'm not sure of it. And it looks so easy. So if you know income tax, just do this question 5. And come to this question 7. Sources of regulations. Need for regulation in Nigeria. Minimum item that will show in your statement of financial position. Items that will show in your statement of so just do 5 and 7. If you have practiced, you should be able to, you should have read all of this before the exam. So because it's a little similar, except this one that I've not seen before. Because I've not actually seen this one before. I'll just leave it. But since we are looking at it, we'll of course have the opportunity to revise it together. So this one, there are things everybody should be able to go. Income tax, we're going to revise it very well. All of you that are going for this diet, income tax, you need to know it very well. EPS, you need to know EPS. We're going to revise it together. So you need to know EPS very well, because it's something you might find there. And all of those standard PPE, IS 38, investment property, even that government grant, you'll be shocked. You just find it in section B. And in section B, they always bring them out. You just find them in section B. What are the 2 types of government grants that you can have? Explain, 5 marks. They'll give you a scenario. Prepare statement of financial position showing the government grant like that. You just see, you'll be shocked like that. And all of this. So financial ratios, those ones are they are regular customers. Now, May 2024 published question 1. So I didn't find published that diet. It was cash flows. But because I've been reading cash flows, I'm already used to it. And I want to assume everybody in this class has actually solved this question. Anyway, when we get there, we'll decide. Then ratio for 10 marks. Okay, fair enough. Number 2, group accounts. Okay, expected. Number 3, ratio. Okay, expected. So number 4, IS 36. You're welcome. I would have been expecting this all through, but they have never asked it. Now in this diet, they're asking it. So I'll quickly run to it because very easy. Differences between impairment and depreciations, indicators of impairment, external and internal, then you list them. I'll give them like 4 points each, because how to identify and account for impairment losses. So this one, you need to summarize those differences between carrying amount and recoverable amount. You need to explain it to them. Then you need to let them know that, okay, when you now have impairment loss, you should go to P&L. However, if the asset is a revalued asset, that impairment loss will not go to P&L, but it will go to OCI. If there's any excess, that will not go to P&L. 6 marks, clean. Then a very simple scenario on how to calculate. I mean, this was then IES 8. These are part of the things we need to look at. This question, yeah, we need to look at it together. Then this one, financial instruments. This question was on financial instruments. And this one was on IES 38. And that was it for that diet. So, and now, last diet, which is the most recent. So for last diet again, okay, question 1 published. So, I mean, so far, we can predict question 1 that there is high chance that it's going to be published, question 1. But again, it might not be published too, but if it's not published, that means it might be cash flows and it can be ratios. And I know that from what they have asked so far, because everything for me, all diets, they look a little similar. That even within you, you have a feel of what you must know. I know I need to know this one, ratio, cash flows published. I need to have practiced them so well. If I'm not an expert in those, I should not even go to write that exam because I don't want to go and embarrass myself and feel sad after the exam. I don't want that for myself. Question 2, I will be expecting ratio. And it's something I will have practiced over and over again. So I should be able to compute all of this. Then I should have good knowledge of analysis. Question 3 again, group account, I guess. Okay, consolidated cash flows. I mean, a lot of students will be shocked this day because they might not know how to do it. But we solved this on Friday, and I want to assume you have all solved it yourself. If you haven't, then that's disturbing. Cash flow again. 2 questions on cash flow in a single diet. Don't joke with cash flow. Go and solve everything solvable. Question 5, conceptual framework. I want you to define all of this. In the B part, ratio again. But in this case, work back. I solved this for you guys. Then question 6, EPS. EPS. Question 7, and I've told you to go and learn about advantages and limitations of ratios because you might find it there so that it won't come in as a shock. These are things you would see that you might see. So don't get there and be shocked that, no, you have to, when you are learning ratio, know the advantages and limitations of ratio. And another one you might find in the exam is limitation of financial report itself. If I don't mention that, remind me so that we look at that. And this last part is talking about ethics. Ethics. Okay, so that is your exam. That is your exam. So you see, the whole idea of this revision class is that every one of you have to pass. And from these 6 diets we have looked at, we know we can predict what will come out in your exam. Number 1 is published. So, but we know that, okay, yeah, published. But we cannot say that these are the additional information that will be there. But if you solve like 4 diets unpublished, you will have a good idea that, I mean, these additional information are constant. Like the one relating to those loan notes and interest on loan, the one on inventory, they're always there. Tax, income tax, you always find it there. It's always there every diet. And depreciation on PP and intangible assets, whether acquisition, disposal, is always there. I know those ones, those 4, and even inventory, yeah, those ones are always there. Is there. It was just last night we saw IFRS 16 on leases as additional information, which is really nothing new if you have learned leases. So that one, I know I have to practice and know that. Take your time. The time you have allotted, I'm sure everybody here has a reading timetable. So the time you have allotted for, these are the things you must be practicing right now. This time is for solving questions. I know that cash flows, I know I have to go and practice cash flows so well. So well. And good, last diet, they asked consolidated cash flow, and we have solved it. So, and it's not so different from the normal cash flow. It's just two things. When you have to consider adding the assets of the subsidiary, when you are doing those changes, beginning, add subsidiary, compare with the closing, then know whether it's increasing. That's just the only thing. Cash flows, go and practice it. These are things you have to know. Ratios and EPS. Know it very, ratios and EPS. Know it so well. Both the calculation, the analysis, and for published and ratios, I wasn't the one that taught you EPS though. So ratios, I've put the solution for you in the handout. I've put the solution for you in the handout just so that it will be easy, because I made this, there are some of their solution here in this point finder. When I even look at it myself, sometimes it doesn't look realistic that which students will be able to come up with this in the exam now. They will just do everything as if, no, most of their solution is not what, this is not what we used to mark. This is not what they used to mark ICANN exam. So don't think this is the ICANN solution. No, this is not the ICANN marking scheme. It's not. So don't expect you'll be expected to, especially those when they say explain and all of that. When you see something, when they write everything, what is this? Don't be scared at all. So for those ratios, I've solved some of those questions for you, at least the most recent diets. You see the simplicity of it, nothing complex. It's something you can easily sit down and write, and you get all your marks because it has done everything you're supposed to do. Unpublished, the handout that you have has already solved all the ones we solved in class. The one I did not solve, the solution are in the handout I gave you. It's easier for you to follow through. It's easier, but if you are used to this point finder and you are used to, and it's not confusing you and it's not wasting your time, oh fine. I mean, whatever works is what we are looking at now. So as I was saying, ratios and EPS, this week, practice the hell out of it. So we know that these three, there is high likelihood that you will find all of them there. The fourth one is conceptual and regulatory framework. Go and revise those guys. Go and revise those guys very well. Even though these last diets, we couldn't find it there to a large extent. It was not there. It wasn't there. So it's okay. It means nothing. But it's better you read it and it's not there than you do not read it. Go and read conceptual and regulatory framework. Because last diet was like the only diet we didn't find it there. Every other diet is there constant. Now standards. I can easily mention 5 standards that I know you would find in either section B or section C. Those standard on assets, oh my God, they love it. IES 16, IES 38, IES 40. Either of those 3, you might find it there. Those ones, you have to have read it and know it. Then, the ones on liabilities, IES 12, income tax, they love it. Now, they have started liking it so much. I'm not sure it was there this last diet. It wasn't there, so good for you. It was not there because they asked 2 questions on cash flows already. Please go and practice your income tax. Though we'll solve some questions together and know it. And finally, this IES 18. So even if this is the only thing you read, let's assume you have not been reading and you don't have time. these ones I've just mentioned, make sure you read them because you find them there in the exam. Now, before you even go into the exam, I will personally will sit down and we're going to revise all of those standards together. We'll just sit down. I'll just IS 16, I'll do the summary for you. IS 40, do the summary for you. IS 8, do the summary for you. IS 40, do the summary. So ordinarily, you should have an high-level idea of everything. And one that I'm really wary of these diets that you might find is IS 37 because they have not asked it in a while. You have not seen it there. You just be shocked. Boom, it's there in front of you, staring at you. Okay, so that's the first thing I plan to do today, just to give you an eye opener on how I can set their questions. And even me looking at those past questions, even me, even you will know what you need to know. You will know because it's directional. I can see it. I can see the direction they are moving towards every diet. It's there, staring at you. So I know that, and I've mentioned it to you, and I know I have to read those ones. When I've read those ones very well, I will then spread my tentacles just so that I will not get anything less than 70 or 80 in the exam. Now, before we dive deep into this one, the first thing I want to quickly achieve is ethics in reporting. Ethics in reporting. So let me show you my board. Ethics in reporting. So now, in case I can ask it in the exam, what we need to know here is not plenty. Number one, you need to know the fundamental principles. Fundamental principles or the ethical principles. They can call it whatever name in the exam. Fundamental principles. Number two is threats to fundamental principles. Threats to those fundamental principles. They can ask it in the exam. Number three is safeguard. Safeguards when faced with threats to your fundamental principles. And these safeguards include actions to be taken. These safeguards are the advice you are going to give to anybody that is faced with these threats. So these are the three things we need to quickly know. So there's nothing much here. And I want to assume everybody knows this already. So let's look at it before we look at some question, your past question on it. So if I may ask you, what are the fundamental principles or the ethical principles for accountants? Anybody?
Integrity,
Honesty.
integrity,
Integrity,
Honesty.
confidentiality.
Don't write
Due
honest.
diligence.
I think it's integrity, objectivity, professional competence,
Professional behavior.
professional behavior.
Objectivity.
professional behavior,
Professional
behavior,
competence, or professional behavior. Copy.
No. Professional competence and due care.
Yes. Integrity.
Professional
Yes.
competence and what?
and due care.
Yeah.
What was the last one?
Professional behavior.
Professional behavior. Which one is now independence? Anyway, I think it's a standalone one because there are 5 of them. So I'm sure that you can explain all of this. You find a way. So that person that said honesty, I mean, that's part of integrity. When you're explaining integrity, you have to be honest, you have to be straightforward. Just explain it to them just so that the guy will give you a tick in the exam. So somebody of integrity, you have to be very truthful and all of that. Confidentiality, the information you get from your clients, don't disclose it because They only give you because you are a consultant. That was how you got it. So you are not supposed to disclose it to anybody. It's not anybody's. So that's confidentiality. So objectivity is that you need to be don't allow undue influence to affect your judgment. You need to um, say the way it is. You have to be objective based on facts. Don't just be biased. Don't be biased. You have to be objective. Then competence and due care. You need to continue to work very hard, update your knowledge, and do your work the right way. And professional behavior, behave like a professional, behave well. Okay, so what are the threats to fundamental principles?
Could it be the self-interest threat, self-review, self-interest threat, self-review threat,
Advocacy.
advocacy, familiarity, and intimidation?
Good. Advocacy threats,
Intimidation threats.
intimidation threats.
Familiarity, okay. Intimidation and familiarity.
Okay. So you need to know the meaning of each of these. Just have an idea of it. It's not like they will ask any serious question around it. But when you're asked to a comment about ethical issue in a scenario, you need to be able to identify why somebody is doing the wrong thing. It could be probably because of any of these threats, right? Like self-interest threat is when you're looking at maybe possibility of you losing money or bonus or increment. Yeah, that will now affect you to do the wrong thing. Will now make you want to do the wrong thing. That's a self-interest threat. Or a self-review threat where you are the preparer and the reviewer. You are the one preparing the account for the company, and yet you are the one doing the audits. Or you are the one that did the tax computation, and yet you are the one that is reviewing that tax computation. You're the one auditing the tax computation. Or you're the one that prepared the budget forecast, and yet you are the one reviewing it. Of course, you'll not find fault in that review. That's a self-review threat. Or you are speaking on behalf of your client. Speaking on behalf of your client is not wrong, but by the time you are now saying something you know is not right, you are speaking the wrong thing for them. Then it is an advocacy threat. It's an advocacy threat. You can speak on behalf, you can comment, but not saying the wrong thing. And intimidation is usually related to when you have a boss using that's placing your job on the line and asking you to do the wrong thing, or there are commercial pressures from your investors or from management, or they will tell you that okay, you would lose your job if you don't do this, something like that. And there's familiarity threats. When you're associating so much with your clients or with business associates that it will now affect your ability to do the right thing. So those are threats. So some of you might be familiar with all of this. If you're doing courses like audit or CSME, you might have been taught in those courses. So we find that they ask it here as well. Now, when faced with these threats, what safeguards can you put in place? Do you have any idea? What action can you take? Anybody?
Not taking a job on a job you have self-interest in.
I think one of them is to resign if you are faced with
Okay. Good ideas, right? Good ideas. Okay, but so let me sequence your thoughts, right? So safeguard in all of these threats is majorly speaking out, right? Speaking out, dialoguing, speaking out, communication. You need to communicate and speak up. And in speaking out and communicating, that means you need to escalate internally first before you take any action. Escalate internally, or let me use a proper word. Communicate internally. So if you have an ethical issue with a staff, you speak with the person that this is not the right thing, this is wrong, and all of that. Or if the person is not listening, you go to your boss, either your MD. If that one is not working, you move to the board of directors, whether the audit committee. So you communicate internally. Yeah. Somebody wants to ask a question. Joseph?
Yes, sir.
Yeah.
My question centers on the fundamental, that is straight to the fundamental principles.
Yeah.
That I'm looking at traits, self-review traits, and advocacy traits.
Okay.
So I came to find out that in the real world, most professionals fall victim of this threat to fundamental principle, especially the self-review traits, where an auditor will be the one that will prepare the financial statements of his clients, and he will still be the one that will pass opinion on that same document. Is it a good practice?
It's a very bad practice.
But it's very common.
It is, I know.
It's
I know.
very common. So sometimes if I try reconciling what we're being taught and then what is prevalent in the practice, so sometimes I get confused.
Yeah.
Is it
So
that there is no regulation on ground to checkmate them?
yeah.
That is
So
my question, sir.
yes. So good practical questions, right? So all these are very wrong. All these are very wrong, and is common among SMEs. Okay, you would only find it among SMEs. You would not want to see you will not see it in most advanced businesses. They do it right. So if you are auditing a firm like, let's say, First Bank, for example, what they will give to you is their management reports. So when they give you management reports, you then audit it. In fact, if they don't give you management report, then just give you a trial balance. And you, as an auditor, have to prepare that management report. You charge them separately for that. It's different. And again, the same thing, I mean, all of these are practical things that happen in practice. Okay. And ICANN is really working so hard on it. Now, like I just got my own practice, my practice license. Unlike before, as soon as you work for 5 years in practice or 10 years, they will automatically give you practicing license free. But now, when I applied for mine, they didn't just give us, we went for an interview, we went for an exam, and a lot of people failed. So they said, gone are the days where we'll just give people license anymore. We won't just give anybody license again. Because we find out that a lot of people that have this license are not competent. And a lot of these people, they are ready to accept any fee. Yeah, you want to audit, you say, come and collect 100,000, 200. What's that? The person will not definitely, and they will say, prepare account, audit. So they will just do a scanty, random, unintelligent report for them. All those would be cancelled. And Financial Reporting Council of Nigeria is really working hard. So let's leave all of those ones for now, right? See, I want to just focus on you passing these exams first, right? So let's even leave real world for now. I will just focus on the exams and what you need to pass. But it's a very interesting questions you have asked, Joseph. Okay, let's continue. Now, for these safeguards, you communicate internally first. And when I say communicate internally, you speak, and that's how you're going to write it in the exam. You will see, hopefully we'll see questions like that. We'll see a question like that. You will speak with the person involved, the person that is doing the wrong thing. Okay. You would speak to his oga, to his boss. If it's the MD, speak to him. That, no, you cannot do this, it's wrong, it's against the fundamental principles of accounting and all of that. You go to audit committee on the board, speak to them. So you communicate internally first before you can get out. If that's not working, then you communicate externally. And externally are relevant bodies like ICANN, like regulators that are regulating your industry, all of that. So we need to, that's communicating externally. Then, if after you have communicated externally and you feel that their ethical stand in that company does not stand with your own, that is when you can think of resigning or take legal actions. Okay, so this is everything on ethics that I need you to know for your exam. Just this: the principle, the threats, the safeguards. Okay, any questions? People can't join. Why? Okay, let's go back to our past questions. And it's important they are here. So, okay, I hope you can see the board clearly. So now,
Yes, sir.
okay, so last diet, they asked our students this. So you might find anything around ethics that I can ask you. So this question says, the preparation of financial statements requires a great deal of professional judgment, honesty, and integrity. Therefore, chartered accountants should employ a degree of healthy criticism when reviewing financial statements and any analysis provided by the company is not required. Identify and explain 3 major inappropriate practices that can be discovered while reviewing your client financial statements and accompanying analysis. Okay, so again, you see, this is exam. You have to be real. You might find it, you might not find it there in the exam. But students that pass and do very well and win prizes in the exam are those that can apply knowledge and confidently write things down and be sure that, like, there was a diet that is right that they were talking about how entities can perpetuate creative accounting. If you remember that diet, we looked at it together just today. We saw that question. Me, ordinarily, you should have practiced that question. And the answer there is exactly the answer I'll come and give them here. Because those creative accounting practice they are inappropriate practices. And that's what this guy is asking here in another way. I will give him those answers straight on. Now, so past questions, don't joke with it, please. Make sure you solve at least those 6 diets where I just showed you. That's how you pass this diet. Before you go and look at any other thing, solve those ones. If you can solve it twice, 3 times, of course, you have the time. If you sit down in a day, you can do a lot. Now, identify and explain 3 inappropriate practices that can be discovered while you are reviewing your client. Okay, for an average student, how would you answer this, right? So what could be the inappropriate? The simplest of answers that you can give the examiner is number 1. You look, okay, maybe they can overstate their income. Overstatement of income. Okay, I will explain that the company can increase its revenue inappropriately, or they can recognize revenue when they have not delivered the product. That's the simplest that I feel you should be able to come up with, because that's overstating income or revenue. Another one is where you are, there are some people that can capitalize expenses, wrongful capitalization of expenses. I hope you'll be able to think of that and why that is an inappropriate practice. Because some companies will not want to recognize an item as expense this year. They will see that, this so much amount, I should put it in my P&L this year. It will reduce my profit. To reduce my profit, they will capitalize it and say, okay, it's an asset. I will spread it over 5 years. I'll be recognizing it to P&L small. That's an inappropriate practice. That's creative accounting. Capitalizing inappropriate capitalization of expenses. Another one is where a company is understating its liabilities. Understating liabilities. Just for you to look as if you are exposed to less financial risk, just so that banks can borrow you money. Because when banks look at your books and they see that you have a lot of liabilities there, they will not want to give you money. But when they see that your liability is not much vis-a-vis the assets you have, they will say, okay, he's exposed to little financial risk, he's not highly geared, let's give him money. So when you understate your liability, it's an inappropriate practice. It's an inappropriate practice. Or when you overstate your assets, you see, overstatement of assets. They said 3 marks or 3 major ones. Don't be scared to give them these simple points in the exam. Don't think it's one big thing. If you're going to mention a big term and you're explaining wrongly, it becomes a problem. You see, this simple answer I've given them, overstating it, and I'm able to explain capitalizing expenses wrongly, right? Or inappropriate capitalization of understating your liabilities or overstating your assets. You see, for me, because I've seen something like this before, I would have been giving them answers like profit smoothing, right? A profit smoothing. Let me show you. This is what I'm talking about. So this profit smoothing is similar to when you are overstating or understating, when you're overstating your income or when you're understating your expenses.
Your
That's
screen
profit.
is sharing.
Yes.
I can't see your screen.
You can't see my screen.
Yes, we
Yes.
can't see your
We can
screen.
see your screen.
Your screen.
Can you see
Okay,
it
you
now?
can see it now.
Yes, we can.
Yes, we can.
Okay. So I've given you 4 simple points that you can easily come up with in the exam in case you have not seen a question like this before, but you should be logical enough to give them those ones. But a more technical point would be
Sorry, sir. Is 3 I'm able to get.
okay.
Overstate an income, wrongful capitalization of expense, and understating liability.
Yes, and I have overstatement of assets.
Overstatement of assets.
Sir?
Yes, sir.
Okay, can we refer to understating or overstating as a kind of a window dressing of accounting information?
Everything, all those points are window dressing. They are creative account.
Generally, okay.
All of them.
Okay.
All of them. And I kind of asked it before that how
Yes,
can
I saw it in one diet that we should
Ex-
differentiate between creative accounting and window dressing.
yes. In fact, that's not even the one I'm talking about. The one that I'm talking about is where they say how companies can create accounts, how they can implement creative accounting. We looked at it together today, and I've said it's the same answer with this one. It's the same answer with this one. I hope you can all still hear me.
Yes, we can hear you.
Yes.
Yes.
Okay. So a more technical answer, which is not necessary in the exam, you don't have to cram profit smoothing. If you remember it, fantastic. Okay. So profit smoothing is where, for example, you want to make your profit to be consistent over the years, just so that investors can see that you have a stable profit by either capitalizing expenses wrongly and recognizing it to P&L gradually, okay, just so that you are not eating your P&L one-off, or you are making provisions for an item that should be recognized in P&L immediately that same year, but you'd kept it as provisions and you are releasing it to profits slowly or gradually. That's profit smoothing. Okay, so which is similar to those simple points I've given you. Another one is off balance sheet financing. This is another technical one. Off balance sheet finance. If you don't remember this in the exam, no problem. But I mean, it's not bad. These are ways to create accounting. These are inappropriate practices. So off-balance sheet financing is when an entity intentionally omits an asset or liability from its books just for it to look strong and less exposed to financial risk, right? That's off-balance sheet financing. So it's
Sorry,
just
sir, can
like
you take that again? I didn't get it. Sorry to
said,
take you back.
yeah, no problem. So I said off balance sheet financing is where an entity intentionally omits an asset or liabilities from its books. Where an entity intentionally omits an asset or liability from its books so that it can look strong, stable, and less exposed to financial risk. So that it can look strong, stable, and less exposed to financial risk. Okay, so an example is where an entity leases an asset and
Sorry, so that it can look strong.
stable, strong, stable, strong, stable, and less exposed to financial risk. Okay, I'm doing exactly what I don't want to do. I don't want to be teaching you something new that you have to sit down to be reading all over again. Okay, so this one is don't really worry about all of these technical terms, because those simple ones I've given you, if you write those ones in the exam, you're just fine. You're just fine. So just listen to this. If you can, if these ones can go into your subconscious, that's fine. It's okay. But if it doesn't, don't worry about new terminologies that you have not heard of before.
Excuse me,
Okay.
sir, but you're trying to state an instance or an example of this off balance. You said, for instance, when an entity. Sorry, can you complete that?
Okay. So when an entity leases an asset and does not recognize the asset in its books, when an entity leases an asset and does not recognize the asset and the liabilities in its books,
Thank
that's
you.
off balance sheet financing. Another one is when an entity intentionally exclude a subsidiary from consolidation to hide a non-performing subsidiary. When an entity intentionally excludes a subsidiary from consolidation to hide a non-performing subsidiary. And many more like that. Okay, let's come back here. Let's come back here. So we are still in 1. And it's just fun, they have marks. So you don't want to delay so much here. So another one is, they said, identify and explain 3 fundamental ethical consideration that professional accountants should always consider. So let's do it like this, because I want you to just, there are some questions I will want to see if you can figure out yourself before I then give you the answer very sharply. So, and if you want to answer, I think you can just raise up so that we'll not find ourselves in a situation where people will be talking at the same time. So, can anybody think of the answer to this one? Don't go and dub the answer from the pack. That will not be helpful. Can anybody tell me what the answer to this one is? If you're interested, you can just raise up your hand, then I'll call you. Identify and explain 3 fundamental ethical considerations that professional accountants should always consider. Okay, Pelumi, let's go.
Okay, so it's either maybe I talk about the fundamental principles, or I also mentioned that the professional person should check if any of the threats applies to him. For example, you should check if he has maybe interest in that company and see if he would. I mean, if he has, it's better he doesn't take the job or something, or just walk around the ethical principles and the threats to find out he can fit in.
Okay, good. That was a good attempt. Yeah, if you're not sure, it won't be bad to just talk around all of that. So the examiner will then pick the correct answer. So the correct answer is actually the fundamental principles: integrity, confidentiality, professional competence, and due care. That's the answer in this scenario. So, but if you're not sure, you can just talk about some other things, some other ethical considerations. Just for the examiner will actually give you some tick for that. But if you can mention the fundamental principles and explain them, and don't forget, they say identify and explain. So you need to, and explaining goes straight to the point. Don't start giving examples and all of that. It might not give you so much mark. Just go straight to the point. Okay, good one. Good one, Pelumi. So the third one, which is 6 marks, they said, despite the largely global adoption of IFRS, users of financial statements still experience problems when comparing financial statements of similar companies. Of similar companies. Okay. So discuss 3 reasons why comparison of primary financial elements is problematic for doing. Okay. So this question now, please make sure you understand the question very well. I mean, the core of the question is reasons why comparison is problematic. Okay. But in order to avoid missing the context, I can see that the examiner is talking about, okay, not companies that are different, but companies that are similar. Okay. And also the examiner said I should discuss. So I have to discuss, right? Discuss 3 reasons. So don't just list. If you list, you haven't you need to paint a picture. You need to talk about something like that for you to get 6 marks in the exam. Okay, so I'm not sure I mentioned this in class. No, I did not. Maybe some other lecturers will have mentioned it. I'm not sure I have not. I haven't. But here we are asking us reasons why comparing primary financial statements between similar companies is challenging, is problematic. So can we paint any picture around here? Of course, I can easily think of 3, 4, 5 points easily, which I think some of you should be able to do that too. So let's hear from Pelumi. Somebody raised up a hand.
Okay, so if I were in this situation, I could talk about maybe the accounting policies and estimate of the companies may be different. Also, maybe their method of valuation of inventory too may be different. And I can paint examples and scenarios, maybe use company A and company B as different examples. That's what came to my head.
Okay, that's fine. And I can see Aisha also mentioned something similar to that as well. So you are strictly on point. But you see that the accounting policy used, right, is a very good point, but is so wide. That point is wide. That point is wide because that method of valuation that you mentioned, okay, is already inside accounting policy. Is already embedded in that point. So you can easily break that down if you want, but if you can't, it's fine. Okay. And I can see Jacinta, she talked about best of judgment issues. Well, I don't really get that, but I want to believe that you mean when we are preparing accounts, we use judgments, we use estimates. So they might have used different judgments and different estimates, right? So that is also correct. Yeah. So Aisha also mentioned different accounting periods. Different accounting periods. Yes, these companies have different year ends. That also makes comparison very difficult. Now, technology used. Well, I don't think so. How does that affect comparison of financial statement? Do you mean accounting software? Even at that, it should not, accounting software used should not. So another one could be maybe they are in different countries and they have different regulations, right? So Temitope mentioned measurement of assets and measurement of inventories. So that accounting policy part, I can break it down into items, into okay, how maybe one company the subsequent measurement model that is used, either cost model or evaluation model for PPE, or the measurement that is used for inventory, or the measurement that is used for their investment property. Maybe they use cost model or fair value model. I will just use that to gain a lot of points. But I mean, accounting policy as a point is okay. Just make sure you explain, because accounting policy is accounting treatment of your items, so it covers a lot. Okay, so you guys have given me all the points. We talked about accounting policies, which includes method of valuation, subsequent measurement basis. Jacinta talks about judgments used by management. We talked about different reporting date or different year ends. Talked about local regulation affecting each of those companies, considering that they might be similar companies, but they might be existing in different countries. I mean, even what about the exchange rates that is used in each of those countries, or the currency of each of those countries might be different. So by the time you do translations, I mean, it becomes problematic for us to also compare And also, you find out some companies, they have a very effective management that are managing the company, while another one, their management is not so good. And even though they are similar companies, you now find out that one is so much better or performing so well than the other. So it's because of the nature of the management that is in that company. Also, it's corporate governance. So you could have different similar companies, but one has good corporate governance in place, while the other one does not. So comparing their financial statement might also be problematic in that situation. So, here often government policies, yes, I agree with you, which is similar to government or local regulations in that country. Yes. Okay, so that is how you would have answered this in the exam. So I don't know how I can instill confidence in you that if you see a question 7 like this, you won't say, Mr. Wasu did not talk about this. Okay. No. No. There are things you know that for you to just sit down and just express yourself and pick, because these is one of the simplest questions that you can answer in the exam. Now, EPS. I would have loved to take EPS and ratio together in a separate revision class, but I mean, this question is so easy that somebody can easily solve it under a few minutes. So easy. So asking of that you should compute basic EPS for 2020 and 2021. They already gave you the profits of 2020 and 2021 here. And from what I'm seeing here, the total earnings is 3.6 in 2021 and 3.3 in 2020. And if you remember, the formula for basic EPS is profits attributable to ordinary shares divided by weighted average number of ordinary shares. This question is not testing anything technical. They give us the total earnings. They even went ahead to give us the number of shares directly. And there was no new issue. All those wala is not there. That they issued one shares, there's nothing. So that means in 2021, it's just 3.6 divided by 12 million. But they told us that they have not been new, there's no new issue or bond for several years. So it's just 3.6 divided by 12 million for the basic EPS in 2021. For the basic EPS in 2020, since they didn't issue any shares, that means it has been 12 million we have had since 2020. So it's 3.3 divided by the number of shares. Whatever you get, that is your EPS. And don't forget, EPS are always in kobo. They are always in kobo. So I'm going to put naira. So that's the basic. The diluted EPS is for you to consider potential ordinary shares that, okay, if they then convert to ordinary shares, what will be the impact on our EPS if they convert? And there's this 5% guy, right, that is going to convert in 2022 or 2023. We don't know when he will convert. Okay, but they gave us the base of conversion. If it's converting in 2022, for every 100 bonds, it gets 30 shares. If it's converting in 2023, for every 100 bonds, you get 25 shares. So we are saying that, okay, our profit, if this guy should convert, our total earnings will our total earnings increase or decrease? Because right now, we are paying this guy an interest of 5% per annum, which is 5% of 4 million is what we are paying him. If you punch your calculator, that should be around 200,000, right? 200,000. So, which we are saving, and we're even saving tax on that. So, if these guys should become ordinary shares, That means that 5% interest that we are paying to this liability, to these debt holders, we won't pay it again. We won't pay it again. That means our profit, our earnings will increase by that. So in 2021, we just need to do 3.6 million plus the increase, because we are saying, okay, the diluted, if this guy should convert, what will be the impact on the profit? What will be the impact on the shares? So if you should convert, we will no longer pay this interest anymore. Our earnings will increase by 5% or 4 million, and that's 200,000. But, you know, we would have to consider the tax impact of that as well. Since tax is at 30%, so if you do 30% of 200,000, that's 60,000. So that means our net profits after tax is like 140,000. It's like 140,000. So in 2021, so it's just 3.6 plus 140 divided by, we said that if this guy should convert, for every 100 bonds, we give him 30. So this is like 30 over 100 times 4 million. 30 over 100 times 4 million. Whatever you get, you add that to your 12 million. So when you do that, 3.6 plus 140 divided by 12 million plus the conversion gives you diluted. Gives you diluted. And the same thing in 2020 is still 3, now will be 3.3 plus 140. And I'm using 140 because that is still the same interest we'll be saving, that we will not pay, assuming he has convert, divided by the shares that would, by how much our shares is going to increase by, we'll still assume the 2022 one, which is 30 over 100 times 4 million. So this question they asked you last night is like the very basic part of the simple part of EPS. He just wanted to give you bonus. Okay, use this one to hold body first. Now, so hopefully, maybe we'll still have more time to solve more questions on EPS, more advanced question. This one is very easy. And let's see. Now, let's go to these other parts. Advantages and limitations of EPS as a performance indicator. So I'll mention this again. Ratios generally, go and learn advantages and limitations of ratios. When you know that, it will help you to be answering, it will guide you when you're answering questions like this. And what are the advantages of EPS that we can have here? Sorry, I can't hear you. Okay. Anybody who can give us advantages of EPS can raise up your hand and you talk, or you can type it. Advantages of EPS.
I think it shows what the company is going to get when they hold their shares, the actual value of the share. Maybe I'm wrong.
Okay, I didn't hear you very well, Sha. But maybe you are saying you are saying it is a measure of performance of the company or what? I didn't hear you. They can be used to measure the efficiency of management. Can be used to measure the efficiency of management. What's another advantages? Can be used to measure the profitability of the company. Yes, the profitability of an entity. Okay, can assist potential investors whether to invest in the company or not. That's a very good point also. So it can help in investment decision. Okay, it can also help management in making dividend decision, that how much should we pay as dividend and all of that. Okay. It can also help shareholders to rank companies in terms of their future relationship with that company and all of that. So what about the limitations of EPS? Yes, that's another advantage. So it disadvantage is that it does not consider cash flows. It does not consider cash flows. I think Esther is talking about it doesn't consider inflation. Yes, I'll take it. It doesn't consider inflation. Then Toyosi is talking about it is not predictive in nature. I don't quite get that. Meaning you cannot use it to predict something like that. I didn't get. Should be able to. Yeah, it doesn't measure cash flows. Yes, you have mentioned that. So what again? What are the other limitations? It can be manipulated by management. And it's solely based on the company's accounting policies. And also it does not consider external factors like the macroeconomic environment and government policies. Yes, it is based on historical data. That's also okay. I hope you'll be able to come up with all these points in the exam because these are good ones. Okay, now this question on this section C, we have already solved this in class. Is there anybody that is finding this one challenging? Because I want to assume that you have all solved this. And this was the first diet that they asked it. They can ask it again, no? This particular workback. They can repeat it. So you can let me know either here or later if you cannot understand this, so that you will not be shocked if it's yeah, that's good. Somebody there said they should bring it. Okay, so now this conceptual framework, this is talking about historical cost, current cost, realizable value, and present value. This historical cost is the amount at which an asset was acquired at the date of acquisition, while current cost is the amount at which an asset is acquired, but which is regularly updated for changes in prices and the changes in economic environment and all of that. Realizable value or settlement value is the amount at which an asset can be sold or amount at which liability can be settled. While present value is the discounted value of future cash flows. So those are what they want you to define. And this question 4, we already solved this cash flows. And I want to assume everybody in this class have solved this question. And this question 3, we already solved this on Friday. And I want to assume every one of you have solved it. If you have not, please, as soon as we are done with this class today, go and sit down and solve it yourself. This question on ratio, I have solved it for everybody in this class. So there's no point us looking at this again because we have solved this particular one. If we are going to solve any question on ratio, it should not be the one we have done before. It should be something else that you can learn anything new. But I mean, just for me to have comfort that you are reading, without anybody dubbing. Can anybody tell me the formula for revenue per employee? You don't need to raise up your hand, just say it.
I think
Reven-
that's the revenue all over the number of employees we have in the organization.
That's correct. What about what's the formula for dividend cover?
How many times your revenue can cover your dividend? That should be dividend all over revenue all over dividend paid.
Hmm?
And that should be how many times your revenue can cover your dividend.
No.
So would it be
That's
Is it?
profit year divided by the
That's
dividend paid.
Say it again.
Profit for the year divided by the dividend.
profit over dividend paid. Shit.
Okay, yeah, that's correct. That's dividend cover. Yeah, that's correct. Profit over dividend paid. What about receivables collection period?
Okay, so that's trade receivables divided by credit sales times 365 days.
That's correct. That's very correct. What about inventory turnover days?
Closing inventory over cost of sales.
That's absolutely correct. What's the pre-tax profit to capital employed?
So profit
That's profit
before
before tax. Over capital employed.
Okay, so I've had some of my students call me that the capital employed we used is different from the one they used and all of that. So look, don't worry, don't bother. Capital employed is never a problem. I've told you, I like to use equity plus debt for my capital employed. So if you're okay with what they use in maybe you looked at your this thing and you saw that they use something else. Maybe they use total assets minus current assets, or they use asset plus liabilities. It's okay, it's fine. Nobody will mark you bad. Everybody knows that your capital employed is either on the part of the equity and liability or on the part of the assets. Either way, it's just an accounting equation. And we might not be having the same base for one reason or the other. Because if those guys use total asset minus liability, we might not have the same. Hopefully, we'll look at the question like that, especially where the capital employed we use is equity plus long-term debt. You might not be having the same because under non-current liabilities, there might be other ones. Okay, so Alexa just wrote non-current asset plus current asset minus current. I don't want that. I don't want that for you in the exam. Except if you are an expert in doing that and you are used to that. Go and do it. And you will find, if you have been reviewing past questions very well, you will see in most cases, examiner will tell you that capital employed, you should see it as equity and loan notes. Even the examiner, in most cases, that's what they want you to, in the question. Not this, like I tell you, this solution you are seeing here is not what we use to mark your exam. It's just a suggested, there are some people they just give solutions. This is not what they have used to mark your exam. I'll repeat it again. This is not what they have used to mark your exam. I can tell you that 100%. And I can usually put a disclaimer somewhere around this solution. Can't find it. There's a disclaimer somewhere. Okay. There's no waste time with that. So don't let this capital employed be an issue for you in the exam. Use whatever one you'd know that is okay, as long as you are using between assets or equity. But me, I strongly advise using equity plus debt. Anytime, any day, you don't go wrong with that. You never go wrong with that. And it's very fast to calculate. In as much as the debt you are using is fixed interest debt. either 10% long-term loans or 5% long-term loans, something like that. Okay, so what's the formula for net profit margin?
Net profit over revenue
Sales.
times on.
Okay,
Net profit margin.
okay. So what would you use as your net profit in this case now?
Sorry, sir, please, can the person come again? Net profit over what?
Over
Over
sales?
Net profit over revenue over sales.
Over sales.
sales.
Okay, net profit here will be profit for the year.
That's correct. What about quick ratio?
Current
Quick
asset
ratio
minus
Current assets minus eventual over current liabilities.
Right.
liability.
Okay. I want to assume you know all these formulas right now. I want to assume you know all these formulas right now. Okay. That's question 2. And this is question 1. I want to assume every one of you have solved this question by yourself. You have sat down to solve it, not just solving it under timed condition. And based on what I've told you now, how many minutes do you have to solve this question in the exam?
You said 36 minutes.
36.
No, that's for 20 marks question. No,
How many marks is this one?
this
30.
this 30 marks.
Question 1 is under 40 minutes.
We use 40.
1 hour 30 minutes.
Philip.
No,
45, oh,
that's for 2. It was saying
45,
that you must be
54
able to have
minutes.
passed in 1 hour 30
Eh,
minutes.
somebody said 54 minutes. You
Yeah,
people, you are just
54.
calling minutes. You are sure calling minutes. You didn't even know that 36. Nobody asked. How did I get it?
Only
Is
God
that
knows.
I think you've explained it before now that the number of marks
yes
all over
now? Those are
100
the
times a minute or something.
yes.
Oh,
So
math times 1.8.
exactly. Thank you very much. The number of marks times 1.8. So this one is 30 times 1.8.
That's 54 minutes.
Yeah. So somebody said 55. I know that person actually computed it. So all those questions, and I mean these guys were very nice to you last night. Not that this question is easier, it's not to, but they gave you 30 marks. In previous diet, it was 25 marks. So that means you don't even have that 54 minutes. And it's the same question. It's the same technicality. The same. So this guy, you need to go and sit down and be sure that you can solve this thing in 54 minutes. And ideally, you should now solve it for less than 54 minutes because I've already shown you the solution. I've already shown you the solution. Okay? So go and practice all of those ones, those previous diet under timed condition. Because ordinarily, I will have advised you that, okay, in the exam, start from section B, then section C, then come back to section A and do it as the last question. But I mean, the reality is that in as much as you are timing yourself, you can do any question in any order. You can go and start from question 6 and say, okay, I have 15 minutes. Is a 15 marks question. This is the one I know. So what's is simple? I know it. What's 15 times 1.8? Okay, you do your 15 times 1.8. You say 27 minutes. You time yourself. Under 25 minutes, you are done. Oh, fantastic. Then, okay, let me go and do this question 1. Then you start your question 1 under 1 hour. You are done. You're able to finish it. Okay, let me go back to question 7. Like that. I think I'm more comfortable with this. 15 minutes, 27 minutes. Identify, explain, 20. You did it. I mean, just make sure that in section C, you answer 2 questions. In section B, you answer 2 questions. Don't go and answer the 3 questions in section C or the 3 questions in section B. Don't make that mistake. You need to, I mean, and that's what this 15-minute reading time is meant for. You see, the examiner will give you 15-minute reading time. And this 15-minute reading time is for you to, if I were you, I'll use it to identify the questions I want to answer in the exam. And in what order? Not just the
Sorry,
questions.
sir. The 15 minutes time, is it not part of our exam time?
No, your 3 hours is still intact.
Wow. Okay.
So Alexa, don't leave blank spaces in your worksheet too. And nobody says that you must answer question 1 first, then question 2, then question 3, then question 4. No. If you pick the first part of your paper, you start. You can go and do, okay, I want to start with 4C. I want to do 4C. But I mean, don't do 4C. If you want to do 4, do 4. I want to start with 4. Then you write 4. You write it clearly, 4. You solve 4. When you are done with 4, you move to, you can say, okay, I want to do number 2. In the next sheet, you do number 2. And you state it clearly that this is number 2. And when you are doing number 2, if it is B, you are comfortable doing first, or A, you can do, nobody say you have to do A before B. But in a question like this, of course, you cannot do A. You cannot do B before A now. But there are some questions that are not dependent like this one. So you can do it in any order. So don't leave space that, okay, I want to leave space for 2B. No, you can do 2A in sheet 1 and go and do 2B in sheet 20. I am serious. If you see the way they mark your exams, you will know that your arrangement does not matter. It's just labeling. You label each answer in a separate sheet. For those that have written the exams before, it's labeling. There are some people that should get more marks, but their labeling actually affected them. You label it correctly because they will tear your sheet apart. They will tear it. They will dismantle everything and share. So there is, the way they mark, there's somebody that is dedicated to marking only question 1. So nobody will wait for the guy to finish question 1 before. So they would remove all question 1, give it to that guy. So it's advisable. Your question 1, do it. When you're done with question 1, you go to a separate sheet and start question 2. Like that. That's how you'd arrange your solution. So don't just it doesn't have to be chronological, okay, question 1, 2, 3, like that. It could be in any order. Just make sure each question start from a separate sheet.
Good afternoon, sir.
Yes.
Sir, separate sheet or separate things. Because in a situation whereby maybe you are solving question 5 and the question 5 ended in at the front page of a different sheet, you still have an empty space at the back of that sheet. So are you meant to just leave that back empty and go to a new sheet?
No, don't leave that back empty. Continue from that back. So
For
don't wait.
No question.
Yes, a new question. So he's saying that maybe you are on a particular sheet and maybe that question ends just at the very beginning of that. You can leave the remaining part of that sheet, then go to the next sheet immediately at the back of it and continue the new question.
Sorry, sir, but if you do so, let's say, for example, I had question 2 on a sheet, and then I'm not going to start at the back of that sheet, question 3.
Yes.
If they are sharing the paper around, they give the question 2 to the person that wants question 2. The person that's going to mark question 3 will not see that I've started question 3 at the back of the question 2 sheet.
I know they would return it to the person that will mark question 3. We always have that kind of situation. So I don't want you wasting.
Sir, I don't understand though what this you are saying. This is my first time of writing. Are you saying?
Well, I do.
You
Because
don't have to understand it,
are you
Nadia.
saying
You don't worry.
I should not worry?
Yes, no.
Why?
Oh, yeah, continue.
Let's okay, new page like this. I finish my question. Then at the back, I'm supposed to continue with my question 3. I should not write it there. Is that what you're trying to say?
I mean, I'm saying you should write it there. You know that they'll still tear your papers apart and give each question to each people.
Make one
So
people no loss, Mr. Wasiu.
it will not now.
Mr. Wasi, they want to mark it.
No go see.
It will not. I mean, it's a lot of students writing the exam. So, and they are very organized. They have plenty people that used to mark. Plenty.
So we can write. I can continue my question 3 at the back of my question 2.
Yeah,
Okay,
yes.
let's not say in a scenario whereby my question 2 is having 2A, 2B, 2C. Then my 2A, I was able to write it in the first page, and my 2B 2. Then my 2C, my 2B actually enters the next page. Do you understand?
Yeah.
I can write my 2C now, Abby.
Yes, you can continue those. I mean, since it's the same
It's
question.
same question. Oh, okay.
Since it's the same question. But please don't waste the paper. Don't leave the back sheet and go and start from a new one. Don't. Your question will never get missing. The worst part is by the time you now finish writing, you have wasted a lot of pages. That sheet, that your own combined sheet is now not enough. You now say you want to collect more paper. You now say you want to collect more paper and attach to it. And those are the scenarios where we find missing scripts that nobody will tell you that your sheet got missing. You will just know that I collected extra sheet and I still did not pass. It's because they did not find that paper eventually. So
Yes, sir.
you are starting each question on separate sheets. Don't waste the paper that you are going to leave a whole page and go to the next one. Don't do that.
So I have a question.
Okay, Esther.
Please, sir, can you solve a question on published accounts? Because I joined the online class and I don't think there was any class on published accounts.
Oh, okay. Yeah, I would do that.
Thank you, sir.
Yeah. Okay. Now, this diet, May 2024, we didn't have any question on published, but there was a question on cash flow. So, how many of you have solved? In fact, is there anybody that has not solved this question? This cash flow question? Is there anybody here that has not solved this cash flow question? Oh, fantastic. I'm proud of you guys. Everybody have solved it.
I think we solved it in class. This particular question.
Yes. Is there any one of you that have not solved it? And everybody said you have solved it.
I have not solved it though.
I've not. Which one?
This last diet question.
Maybe I'll do it today.
I have not solved
Can let's just do it now.
We did it generally in the class last week.
Yes.
Mr. Wasi, please, let's just run through it.
Like happiness, like personal solving.
Okay. So first is the examiner wanted to use direct method. And it's really nothing different from other cash flows, giving you statement of financial position and also P&L. And, when I solved that last question with you, I told you that the additional information is like a bonus for you because they will give you a lot of key cash flows. And if you can see here,
This.
and what did you say?
Sorry, question. What is this, sir?
Question 1 of May 2024. And I saw that if you see this one, if you see the first additional information, you see that they said they have a plant. The carrying amount is 40. It was sold for 55. So that means this 55 will be an inflow in investing activity. A dividend of 2 kobo per share was paid. That means I'll calculate dividend of 2 kobo per share. I'll put it in financing activities. Because this is direct method, right? So that means depreciation. They gave me depreciation for plant and equipment and on furnitures, which I will use. It will be helpful when I get to some points in removing non-cash items. Then also, there was an investment that cost 12.5 million some years ago. I was disposed for 20 million. This is also investing activities of 20 million. Okay. And you will see that is the amount they sold it that we are putting in investment, not the cost of it. The amount we received in cash. That's what goes to investing activities. And there was dividend received. For me, this part is the most technical part of this question. This V part. Okay. And from what I'm hearing now, all of you are saying that they have solved this for you, all of you. So let me ask Ahmed or Jamil, what's this one talking about? What's the impact of this additional information 5? Jamil.
Yes, sir.
Tell me, what's the impact of this additional information 5?
Can I say something, sir?
Oh, yes.
I
Yes,
think
sir.
it's premium.
Okay. So,
Can
Jamil, do
I?
you agree? Hey, can I have any other contributions, please?
Okay, what I can see here, dividends received were from investment in shares. So apparently they had invested in shares in that period, and they also disposed the right of issue from the investment in shares. Like maybe they invested and they also disposed in the same period.
Okay, so there's really nothing here. I was just trying to be funny because dividend received is dividend received. They were referring to this dividend received here. Just for them to, they are just telling you that this dividend received you are seeing here is cash. That is money. So it's from shares and immediate disposal of rights issue from investment in shares. That is cash, is money, is actual money, is inflow. So this one of dividend of 2 kobo per share, and there were also bonus issue also. What would this one impact? Dividend of 2 kobo per share, and there was also bonus issue. What would this one
And
impact?
this dividend of cover share is money that they paid out to their shareholders, number of shares, and Superbo. And I think bonus issues, they also issued out some shares, but not at the maybe current market price.
Okay, good. So where would that, how would that impact our calculations here?
So bonus issues, they give us the rate at which was, as it is, was sold. Okay, hold up. Let's look at it. The total assets and liability. So ordinary share equity capital increased by 100,000.
The response I'm getting from you guys is not exciting me. It be like say even me, I'm reading more than you people. Or maybe it's because I'm reading only FR and you guys are doing a lot of courses.
Exactly.
Which exactly, even if I was reading
Well,
everything,
help us to scroll up so we can look at that equity and equity part and look at how it impacts.
okay. Have you seen it now?
No, we've seen that the equity. No, on the financial statement, the difference in the equity. So you can say it.
I think it will affect the equity section, and the bonus issue affects the share capital.
Yeah, that's correct.
Then the dividend paid should also affect the maybe retained earnings or not so sure the particular item there, but it will also affect equity. Okay, I think that's the retained earning. The dividend paid will affect the retained earning.
Yeah. Okay. Should you quickly solve
Mr. Ross, I have one question, please, which I noticed in the last cash flow that we saw. Can I go ahead?
Yes, please go ahead.
So when you see that your ordinary share increased, or less your premium share increased, or less your ordinary shares, that means apparently they've issued shares in that period. But then, and maybe there was one question I saw, maybe I didn't interpret it very well, but it just showed that, okay, as the share increased, that means cash came in. But what if it's in the case where it wasn't actually cash? Maybe it was shares for shares that they, or maybe they converted a bond to a share, to shares. How do you know that increase in equity doesn't just mean that they issued out shares and they got money?
That's exactly what this scenario is talking about. They will tell you. That is what this examiner is trying to tell you here. That increase in shares that you might see is not entirely cash inflow. That there were some that were bonus issue. So that's the only way you would know. That's the only way you would know. So let's revise this question together, please. Within few minutes before 1. We'll move to the next one. So let's look at this guy. It's good enough. That means most of you have solved this question yourself. So which method are we using here?
Sorry, Mr. Asio, another question I remember. When you're using the indirect method and you're doing changes in working capital, I know that the constant is change in inventory, change in payables and receivables. But you know, some questions will have maybe like all those other payables, staff remuneration that you can see that they actually have an opening and closing balance.
Yeah.
Like the one that we did, that Ogbagi PLC, because I was trying to do the indirect method. I know we saw the direct method, which I did. I was trying to do the indirect method myself and Christian. So those ones, like all those other payables, staff remuneration, all those payables that have open and closing, they also consider them in the working capital.
Yes, you will.
Oh, Okay.
You consider them in the changes in working capital.
So the payable, receivable, other payable, interest
Everything.
receivable, staff payable.
Everything.
Oh, wow.
The secret to balancing any statement of cash flows is that you capture all movements. Every item must be touched in the account. Every item. Any item that you are not touching, that means it must be a reconciling item or reconciling cash and cash out.
Okay. And any question can both serve as direct and indirect. Like if you have a question, you
Any
can be
question,
certain that whether you try indirect or direct, you should get the same answer.
the same answer. You will.
And if they
So
don't tell us in the exam board, we can pick either of the one that suits us.
you will use either of the method.
Okay, thank you.
Okay. And please, I want to beg you, always look at the question no, and check that they're asking you to use direct or indirect too, because you can see in all that we have solved together, the examiner always tell you. Gone are the days when they don't mention. Now they mention. Now they do. So you always find the examiner will tell you, use this method, use that method. So, and if I use direct method for you guys here, I would really appreciate if you can go and solve this same question using indirect method, because you can easily solve it also using indirect method. But this question says use direct method. So either way, it's fine. And for direct method, your operating activities, like I've told you, you touch every item in P&L. You pick them one after the other. So the first item here is your revenue. And you quickly get the cash elements of your revenue. So usually you will do that in your workings, which is cash received from who? From customers. And you will do your opening receivables. In this case now, how much is our opening receivables? 60,000. 60,000. Your revenue is how much? How much is your revenue? 490,000.
490,000.
So this one is fast instead of me doing expected income. Then you remove your what?
Your closing.
Your closing receivables, which is how much?
90, I think.
90,000. So how much is the cash received?
460.
460.
So my cash received from customers is 460. Inflow, outflow?
Cash receipt inflow.
Inflow. Then my cost of sales, everybody knows already that the first thing I will determine is my
Purchase.
determination of what?
Purchase.
Purchase.
Okay.
And I saw somebody on our group, the person posted a template for determining it. I mean, you can, if you are okay with that, why not? So opening inventory, how much is our opening inventory? 120,000. Abi?
Yes, 120.
Yes. We don't know our purchases, but we know our what?
Closing.
And how much is our closing inventory? 295. Abi?
Mhm.
Then what's my cost of sales?
122,000.
So me, I like to do it like this. So I will just do this minus this. It's giving me a minus what? 295
175.
minus 175. Add it to 222. That's 397. 397. So then I can then do my cash paid. My cash paid to suppliers. All my opening payables.
Opening payables.
That's
14,000.
14,000. Opening payables 14,000.
Yeah.
What's my purchases? 397.
397.
What's
I'm
my
closing at 65,000.
okay? So how much is my cash paid?
346.
346,000. So my cash paid to
Suppliers.
suppliers 346. Abi?
Yeah.
Okay. Okay. So
Next in administrative expenses.
in everything you do, these first three workings, don't ever get it wrong. Go. That's like always, because it's the same thing, always a bonus for you. Now, this is where you now have to think this admin expense. Because for direct method, the whole idea of this admin expense is that, okay, I want to get the cash element of this admin. How much of it is cash? Now, a lot of things now came up. If you look at your additional information, additional information 1, look at it. They said there was a profit or loss on disposal that was charged to distribution expense. Okay, I will come to distribution expense later. I'm still dealing with admin. This one was charged to distribution expense. Then there's bonus. There's depreciation. Now, here, depreciation, they didn't tell us whether depreciation was charged to distribution or admin. So, may I ask you, what do you assume? Because you need to know that depreciation, admin, thank you very much. It's most likely going to be admin. Not that it can be in distribution. And if you assume distribution, not that you'll be wrong, you will not, you still get the same answer. But I mean, admin is the go-to for depreciation. Not only that, in this note 4, there was a profit on disposal that was also charged to admin. There was a profit on disposal that was also charged to admin. So all that are non-cash items that needs to be removed. And in my statement of financial position, look at the tricky part. Can you see this accrued expense? Can you see it? It's also a non-cash item as well that you need to adjust for. So how do you then adjust for this? We would most likely use the conventional way, our approach, to do that, so that in the exam you always get it right. But these accrued expenses needs to be adjusted for. Now, just so that we are fast, I can combine admin and distribution together. I can combine them together and adjust the non-cash elements of them. I can do that. So let me just combine them together. If you want to do it separately, I mean, it's okay. I mean, since this is administrative and distribution expense, what's the opening accrued expense? How much is the opening? The opening is how much?
50.
50. Then the admin in P&L.
The admin in P&L is 90,000.
Well, in class. One class. My share link in Abby. Yeah, we share it. Yeah. What about the
distribution is
distribution?
40,000.
Okay. So before I deduct my closing, let's deal with all those non-cash items. They said there is a profit or loss. Can you see this additional information one? The profit or loss on disposal was charged to distribution. So what's the profit or loss on disposal here?
15 million.
10 million. That's the profit on plants.
Plant disposal.
Yeah, on plant disposal. Let's write it like that. 15. Are we adding or deducting this?
Deducted.
Why are you deducting?
Because it's not cash.
Because the non-cash has been added to it, so you remove it.
We are adding it. Profit, we're adding.
Thank you very much.
It's an
No
income.
profit. Are you adding profit?
Yes, because it was used to reduce the expense, so you need to add it back.
Thank you very much.
It's an income.
It was used to reduce the expense before, so now we add it. You know, when they say a profit was treated as part of admin, that means it has reduced your admin. Income will have reduced your expense. So what you do is to reverse that, you add it back. Is that clear?
Yes, it is, please.
I think so.
Okay, that's that a bit. Then there was depreciation. There was depreciation. No two has no impact. Then there's depreciation of 40,000. So that means we'll come here. We'll add what? Depreciation. Since this is an expense, what do?
We remove it.
We remove it. Thank you. We remove it. Then what again?
I have another note there. 4.
Note 4, investment. There was a profit or loss on disposal that was charged to admin. So how much is the profit?
7.5.
7.5.
And you have to be very careful and be sure that it's actually a profit. Okay?
During the year and investment.
It's a profit because the sales was higher than the cost. Profits on sale of investment. What do we do? We add.
We had it.
Then the final one, this one has no impact. This one has no impact here. Then our closing accrued what?
Expense.
How much is the closing accrued expense? I think it was 40,000. Let's confirm.
Yes, sir.
It's 40. So what's the balance? How much?
$122,500.
Eh? I can hear
122,500.
Okay, 122,500. Okay, I hope you'll be able to do something like this again in the exam. I hope so. This is going to be an outflow, right?
Yes.
So we are done with admin and distribution. What do we do with this finance cost? What do we do with this finance cost? Yes, that's the next item there.
Yeah, we check if there's an interest paid.
If there is anything for the year open and
Interest
closing.
payable.
Okay. Now, Now, again, you need to decide, are you treating the finance costs? Because this is direct method. It's unlike indirect method where you will add it back, then you come and deduct it later. You know, this is direct method. You are not adjusting it at all. So you need to decide, do you want to treat it in operating activities or you want to treat it in financing activities? Okay. I think it's comfortable for you to just treat it in operating. Just know that you're done with it.
They're done.
Yes, just put it in your operating straight on. So this finance cost 5,000. And as you guys have rightly said, I go to my liability and see if there's any interest payable. And here we don't have any interest payable. That means this finance cost of 5,000 is cash. Abi?
Okay.
Yeah.
Yes.
So finance cost, how much?
5,000.
5,000.
5,000. Now, this dividend received, are we treating it in operating, financing, or investing?
Investing.
Financing. Financing.
No, dividend, financing.
Investing.
Is
No,
investing or
Investing.
Dividend receive is investing.
it's
Investment.
Investment.
okay, so we treat it as investing activity. Thank you.
the
So
dividend.
we'll leave that. Yes, the dividend received, investing. So I'll go and just make sure you don't forget. Then the next item here is the income tax expense.
So I have a question before we move further.
Yes, please.
I have a kind of reservation to this finance cost that we treated in the operating. Why is it that we cannot treat it in the financing?
You can treat it, why not?
Yeah, I said it that both ways.
You can
Okay,
treat
and
it.
then they won't penalize us that we put it for operating.
It's not possible.
Excuse
Okay.
me, sir. Okay, so if we have dividend paid and we have dividend received, are we treating both in the financing activities? Because that's the
No.
essence of investing,
No.
dividend received and
No.
investing.
The two of them are not the same thing.
Exactly.
Dividend receive and dividend pay are not the same thing. They are being treated in
Yeah.
different ways.
So why should we consider it
So
as a
dividend received is like you've invested and then you're receiving dividend of what you've
Exactly.
invested.
You are receiving
Dividend
commission
paid,
from
people are financing your company and you're paying them interest for financing your company. So that's what you paid will go to financing because you are giving back the interest on the finance of the company. But what you received is on the investment you made. That's why it goes to
another
investment.
your investment in another company.
I understand this. My question is on the basis that they said dividend received can also be treated as a financing activity. I'm like, okay, so if we now have dividend paid, how do we not treat both? Because the idea is dividend received is supposed to be an investing activity and dividend paid is actually a financing activity. So that's what I think.
Who said dividend received can be a financing activity?
Dividend paid is, I said dividend paid. Okay, so in the course of I heard that, or was
It's
that
finance cost. You were saying that
It's
finance
finance
cost can
cost
be
we are talking about.
operating.
It's finance cost we are talking
we were
about. It's not
finance cost. We're actually talking about dividend received. Someone now asked, can it be treated as a financing activity? So that was why
no.
I asked.
I think I'm the one that asked that question, if you got me right. I even said that I want to take us back a little. That the finance cost we treated earlier, can it be treated? Well, I was asking, why is it that we cannot treat it as a finance cost instead of operating? That's when Mr. Wasiu said that we can treat it in both ways. So that's what we were discussing before we now get to dividend received. So it's two different things. Maybe you are trying to make it up.
Okay.
Yeah, thank you everyone for that clarification. So I'm proud of you guys. Okay, so the next item here is income tax expense, which is 70,000. That's the next item. And of course, to know whether or the cash element of it, you go to your current liabilities and you can see the movement here, opening 12, closing 70. So the tax paid, Okay, the opening is how much?
12,000.
What's the income tax for the year?
A minute. 70. We have 70.
What's the closing tax?
70. So I think
70. Should only pick 12.
So, how much are we picking?
12.
12.
And which represent our what?
Tax paid.
Tax paid. Okay. So, can we sum this together?
Please, I have a question, Mr. Osio.
Okay, please ask.
In
75.
solving for cash paid on admin and distribution expenses, I can find out in working we did not use the closing value for the accrued expense, 40,000. I don't know, is there a reason behind that, please?
Use the
They did not use what?
The 40,000 for the closing, for the closing for accrued expenses.
We used it all.
We used it. CX style.
Yeah, even what you're even supposed to do is to understand exactly what we are doing here. And that will have been more helpful to you instead of opening the solution side by side. We'll have gotten almost same. Okay, so what did you get here?
Minus 25,500.
Negative.
So that's net cash outflows, Abby.
See?
So what's the investing activities?
Your non-current asset, movement non-current asset.
Go to your non-current assets. We have PPA and investments here, Abby.
Yes.
If you look at your additional information, note 1, they already told us that they sold a plant, Abby.
Mm-hmm.
So how much are we picking? Is it the 40 or the 55?
55.
55. 55.
Thank you very much. So sales proceeds from what?
Sales.
Okay. Not only that, I need to, and also I can see there was depreciation. And that was the additional information they gave me on plants. Okay, this is what I was talking about in the last question I solved for you. That this one, they did not see anything about acquisition, whether they bought a plant or not. And they didn't say they didn't buy a plant. The question we solved on Friday was very specific that there was no acquisition and there was no disposal. So that was why we didn't bother doing that reconciliation of PPA. And I said, hopefully we'll see another question where we would have to. And this is that kind of question. When they tell you that they sold plants and they kept quiet. If you just pick that sales and you're looking, you'll be wrong because there might be some gap where you can pick acquisition. And a question like this, I'm sure there would be. So you will need to do that PPA reconciliation. Just the same thing we have always done, nothing special. You do your opening. How much was the opening?
Of PPA?
Yeah, 110, Abi?
110.
Yes, 110.
110. We're told that we disposed. How much are we picking for this one?
40,000.
Thank you so much. Don't pick 55. It's the carrying
Right.
amount pick.
Carrying amount.
Okay?
When we are adjusting for PPA.
Yes, don't pick don't pick the sales proceeds. Is the carrying amount of the asset disposed that you pick.
Okay.
Yes. Then depreciation. How much is the depreciation?
40.
30. Okay, 40, both for
For
furniture and
plant and
transport.
for
Yeah,
40.
for the two
yeah,
assets,
that'll be
but
40. Mm.
and that's all. So this is the expected closing.
Yeah,
30.
30.
That'll be 30.
30. But what was now the actual closing that we have?
350.
Yeah, 350.
It means
350.
that it has
That was,
increased, Abi.
yeah.
Yes.
So what's that showing?
380.
That we are
Activation.
tired.
But so I have a question.
Okay, what's
So
that?
if he increased, I don't know, maybe like a clarification now. So if he increased, and then we now saw that there's income in other comprehensive income, then that means maybe the increase is due to revaluation surplus, right?
Correct. Correct.
But if there's no other comprehensive income, that means it's purely acquisition.
Exactly. I mean, that's
Thank
highly
you.
logical from you. So if they, for example, give you that, okay, there was a revaluation surplus of 50, so that means it's expected that out of this 320, 50 should be attributed to that revaluation surplus. Yeah. Yes. Shinaza, this 40 of depreciation is for both assets as given in the question.
So does it mean the valuation surplus value will be also in the PP schedule?
Yes, to be.
Okay.
To be. So that means there's acquisition here that we have to put. And don't forget what led me into doing this schedule that I did here. Because the
Acquisition.
examiner told me, there was a disposal, and they were
Disposal.
silent
I said,
about
don't have
acquisition.
disposal.
And they were silent about acquisition. That means I have to do the schedule to confirm that is there acquisition or not. The same way they tell you that we acquired though for this amount, and they were silent about disposal. You have to do the schedule to confirm if there is disposal or not. Just that for that one of disposal is a little technical, because whatever, if this one was, for example, a decrease, okay, if it was to be a decrease, you're not having a disposal, okay, you cannot just go and pick that decrease and go and put it as that's the disposal. Do you get what I'm saying?
Yes.
So if, for example, this is, let's say 320, and the actual closing, let's say it was
30.
let's say it was 280. That means it decreased by how much?
40.
40.
40.
60.
You know, no, it decreased by 40.
40.
40.
40. You know that you're not going to put that 40 in your cash flows.
Would it maybe impairment or depreciation?
No, that 40 is the carrying amount of the assets disposed. So the
I
examiner,
don't understand.
let's start from here. So if it was a decrease, if it were to be a decrease like this, and we're having 40, you know, this 320 that was an increase, we quickly put it here as 320 acquisition, Abi.
Yes, sir.
If it was a decrease, you won't come and put disposal here for this 40, because this 40 is not the cash received. This 40 is the book value of the asset sold.
Yeah.
So the examiner will have given you the profits or the loss on that disposal in P&L or in the additional information. They will give you somewhere, mostly in the P&L.
Yeah.
So if they tell you that, let's say the profit is, let's say 10,000. That means the sales proceeds that you put in your cash flow is 50. If they tell you that the profit is 10, okay, that means you add it to the book value. That means you sold it for you to have made a profit of 10. That means you will have sold it for 50,000. But if it had been a sale, like a loss that they give you in your P&L, you just deduct that loss. That means your sales
30,000.
profit will be 30. So I hope you'll be able to see a question like this, so that you'll be able to practice this. If you're not getting it, let me know, right?
So we don't get it though.
Please, can you explain this again?
I don't understand your explanation, sir.
Okay.
So we don't get it at all.
Okay. So this 320, right? You understand that this is an acquisition because it increased from 30 to 350. So that's an increase. So we say, okay, that means we bought additional assets. We put it as an acquisition here. So I'm just drawing up a scenario that it might not be increase every time. What if you have a scenario of decrease where you have 320 and the actual closing in the balance sheet or similar financial position is 280. That means there's a decrease. You know, this decrease, we should see it as disposal. Do you get this 40? That this decrease should be disposal?
Yes.
Is there anybody that does not get this 40? That it should be disposal. Okay, good. If you get that, what I'm saying is that this 40, don't go and see it as the cash that we received or the sales proceeds on disposal, because it's the sales proceeds on disposal that will take to cash flow. This 40 is representing the book value of the asset disposed, the carrying amount of the asset disposed. It is not the sales proceeds. To get the sales proceeds, the examiner will have given you the profit or loss on sale of that asset in P&L. They will have given you. They will definitely give you. So I'm saying if, for example, now they give us the profit on sale in P&L as 10,000. That 10,000, you have to add it to this book value to get the sales proceeds. You'll have to add it to this 40,000 to get these proceeds, because your sales proceeds will then become 50,000, which is why you would have made a profit of 10,000 in the first place, because you sold it for 50 when your book value was 40. But they might not give you all those details. In case you have a scenario like this, don't go and jump to put this 40K in cash flow, because that's not the cash. You need to either add or deduct the loss or profits to get the cash flow. Now, hopefully, you might find a question like that when you are practicing, but usually the examiner have found a way of making it easy for you. Like this question now, whenever there's disposal, I can see they always tell you, okay? They will tell you, like here in this note 1, they told us the book value is 40. We sold it for 55. Okay, which is why we said we made a profit of 15. So what I'm explaining in the other end is, if we had worked out 40 ourselves as the book value of the asset disposed, don't go and treat this 40 in cash flow. You see that it was this 55 we took to cash flow. So you have to work out this 55 yourself by doing 40 plus profits to get 55. Right? But that's like the extreme part. In most cases, they will give you like this, like the way they have given you this note. Okay, Judith, go ahead, please.
Sorry to take you back here. So, in a case where there is a gain on revaluation and we're trying to compute for the PPE workings, how is it handled or how is it treated?
So, if there was a gain on evaluation in this case now, the easiest way I might have advised you to do it is you can just come here and put the revaluation gain here. Whatever the amount is, just put it here and as an addition.
Okay, thank you, sir.
Yeah.
Okay, sir, I have a question, please.
Okay.
Yes, sir. So are there cases where depreciation is not given and accumulated depreciation is given, knowing that depreciation is actually the non-cash item? How do we go about that?
Well, you have to solve it yourself in such scenario. So you will still use this reconciliation to determine it. So in that case, there's a way the examiner will have done. How I wish we could see that kind of question. The examiner will have told you that, okay, they will have told you about the acquisition and the disposal. They will have told you about every other thing. At every point in time, there will always be one unknown. At every point in time, there will always be one unknown. That the balancing figure you will get here will be that depreciation. In this case now, they gave us the disposal, they give us the depreciation. If they don't give you depreciation, that means they will give you disposal, they will give you acquisition.
Okay.
So the balancing figure will either be any of them.
Thank you, sir.
Okay. So we are done with PPE now. Now the next one is investments. You'll see 30-60, but the examiner also make some life easy for us, our life easy. If you look at note 4, they said during the year an investment which cost 12.5 was sold for how much?
5.
Okay. So there is a sale of investments of how much?
20.
How much?
20
20
pounds.
million.
Okay. If you stop here also, you'll be wrong because you need to confirm whether there was an acquisition. So you will have to do the movements. You have to do the movements, just the same thing we have always done. You look at the opening. What was the opening for the investments? The opening was 30. Abi?
Yeah.
Opening 30 and the closing
36.
60. So opening 30, then there was a disposal. How much are we putting in this disposal?
12.5.
12.5.
Thank you very much. Don't go and put the proceeds. It's the carrying amount you put. Okay. So what's the expected closing?
60.
No, expected was in 40.
7.5.
No, 42. No, 17.
Expected
7.5.
17.5.
17 plus 5.
17.
17.4.
So what was the closing balance we have?
60,000.
Okay. So there was an increase, Abi.
We?
Yes.
That will be acquisition of what?
Increase.
Which is how
Investment.
much?
43.
42.5.
42,500. Acquisition. And that will be outflow, right?
We?
Yes.
Outflow.
And don't forget the dividend received, because this is the point where you actually forget. Otherwise, there's a problem. So there's a dividend received of 153,500 that will come here as an inflow. So now I'm truly done. So can you net it for me?
Minus
134,000. 34,000 negative.
Like this?
We?
Yes.
Yes.
Okay. Net cash outflows from investing activities. So financing activities.
Concentrate on equity.
That's correct. Equity and liabilities, not just equity.
Liability.
So the first one, let me quickly deal with these non-current liabilities. There's an increase of how much? 40, right?
40.
Yeah.
Increase of 40. So that's borrowings, Abby.
Yeah,
All right.
inflow.
That would be an inflow.
Yes.
Okay. What's the next one? Then I can go to equity now. Okay. So my equity, my ordinary shares increased from 120 to 220, 30 to 60. So you'll be wrong if you just capture these 130, hook, line, and sink. And you're wrong because in these note two, they told us that there were some bonus. They told us that there were some
Yeah.
bonus. Okay. So how do we determine that bonus now? What's the easiest way of determining the bonus? Okay, so there is no easy way of determining it, and this is the most technical part of this question. It's really a student that have seen this question before that will be able to solve this note very fast. So the way you do it is for you to through the dividend paid. Dividend paid. You determine the dividend paid through your movement in retained earnings. Okay, so what's the opening retained earnings?
Opening in 199,000.
119,000.
Oh yeah, 119, sorry, 119,000.
What's the profit for the year?
Profit for the year, 216,500.
So what's the expected closing?
Three
500.
Okay, what's our closing?
280,000. 280,000.
Our closing is 280,000.
Okay. Ordinarily, the difference should be dividend paid, Abby.
Yes.
So my expected dividend is how much?
75,500.
75,000.
500.
It's 55.
55.
Sorry, 55.
Okay. So, but is that our dividend? Is that our dividend paid? What's
No.
our dividend paid? It's 2 kobo per share.
2 kobo per.
Yeah, 2 kobo.
Okay, so 2 kobo per share, that's 0.02. Abi? Times
Yes.
what's the number of shares? What's the number of shares?
Number that should be 220 divided by 8.
Thank you very much. That's how you determine the number of shares. 220,000 divided by 80 kobo.
0.80.
Yeah.
Number 80 kobo.
220 divided by 0.8. So, what's the dividend paid?
5,500.
So, this dividend paid is actually 5,500. But the difference we are having was
50.
It's supposed to be we're supposed to pay 55,500 dividend, but from our calculation, we saw that we paid only 5,500. Where is the remaining?
Sir, the 5,500 naira paid, is it not bonus issued?
How is the bonus issued? We calculated dividend paid here. 2 kobo per share. That's the dividend paid.
Okay, I got it.
Yeah, this is the dividend paid from our calculation. But looking at movement in retained earnings, it's supposed to be 55,500. Can you get me the difference between 55,500 and 5,500?
50,000.
No. So So, Jamil, indirectly, you are saying that from what I think you have known before, you are saying this should be bonus issue. So we are saying that this 55,500, we only paid 5,500 cash as dividend. The
Okay.
remaining was paid as bonus.
Oh,
Was not given as cash, it was bonus.
Very
wow.
technical.
Exactly, it is. It is.
So
It
with
is.
this bonus get from shares
So what
or
is
be
it?
added? Sorry, will this bonus now be added or deducted from the shares, the ordinary shares?
Exactly. This bonus is part of the movement in that shares. So we will not capture it as cash
Oh, okay.
because it's non-cash.
So we are going
Oh.
to recognize only the cash.
Exactly. So you see, that share capital now,
I don't know.
that share
Just
capital now,
moving. It's like a revision class, sir.
what's the opening share capital?
The opening share capital is 120,000.
120. Now we know that there was a bonus inside, Abi,
Yes.
of
Yes,
how much?
sir. 50,000.
50,000.
Of 50,000. So it's supposed to be how much? 170.
170.
But what was the closing?
220.
So
50 dividend.
Still 50.
50, Abi.
50, yeah.
Now, how about the share premium?
Opening is 30.
Opening is 30. What was the closing?
90.
Closing is 60.
No, 60.
60.
60. So issue of how much?
Issue of
30.
50.
So for your financing now,
That's okay.
my dividend paid is how much?
5,000.
5,500.
My issue of share capital is how much?
That's 50.
50.
And share premium
Share
30.
premium is how much?
30.
Okay. So this for me, there are other ways you could have derived this, but this is one of the easiest way. Looking at the way we have been doing our solution from the beginning, just to follow the opening for the year expected, then this should have been the dividend. But of course, if they didn't give me these notes that they pay dividend per share and there was this bonus, I would have taken the whole of this 55,500 as dividend paid.
Mm-hmm.
I will have taken everything. But the note now told us that dividend that was actually paid though was 5,500. Now the remaining, they said is bonus. They even told us that and there was bonus. That means the remaining was bonus. And it makes sense. Bonus issue are actually from your reserve. Bonus issue is like capitalization of reserve. You are moving from retained earnings to reserve. Sorry, you're moving from retained earnings to share capital. So that takes care of that entire ecosystem. So, and I'm not sure there is any other additional information there that we need to deal with. So how much is this one giving us? How much?
145.
Sorry?
145.
114,500.
114,500. Outflow or inflow?
Inflow.
No.
Yeah. Okay. So can you get me the cash and cash equivalents during the year?
Yeah. Let's see the question.
So help me do 25,000 plus 134,000. Sorry, I said 25,000. 25,500 plus 134,000
Minus
minus
1,400.
minus 114,000.
Sorry, are we plusing the investing activities?
However you want to do it, this is minus minus plus. So
45.
that's 45,000.
Yes, sir.
And it should be negative, Abi?
No, I'm getting a positive.
It's negative now because these
Negative.
It's negative.
are higher
Out.
than this.
Okay. 25 is negative. Okay.
So opening cash and cash equivalent. What's the opening cash and cash equivalent?
Look at our
You have to look at the bank and the overdraft together.
and cash.
Exactly. So the bank is 40, Abi,
Yes.
and the overdraft is 5.
Yeah.
Yeah, so
So
that's
what's
35.
35.
that's 5? That's correct. That's 35. And 35 positive, Abi.
Yes.
Yeah.
So that means our closing cash and cash equivalents be how much?
To be 5. To be 10.
Minus 10.
Outflow 10.
Mhm.
You know, you need to be sure that that one is also jiving. So bank is 15, Abi.
Yes.
Overdraft is 25.
Overdraft is 25. Yeah, minus 10.
Correct.
Minus
Minus 10.
Okay, so this one, anyway, because it's question 1, I think it's even much more, I won't say it's much more difficult, but I mean, it has some jaras to it. Yeah, and you need to, so this is a typical question that you need to sit down and solve yourself. These are questions that build your confidence in the exam. Okay, so for me, as far as FR is concerned, even every other of your courses that you're doing, you just have to sit down and be solving these questions yourself. Somebody's asking, where is the 10,000 coming from? Which 10,000 are you talking about? Is it this one?
Yeah.
Is the combination of this and this?
Closing cash and cash equivalent.
Yes.
Cash and overdraft. When we
Yes.
compare it.
Yes. So it should balance with whatever it is we are getting here. So minus 45 plus 35 gives minus 10. When we go to our books and we do 15 minus 25, that should also give us minus 10 as well. Okay, so I mean the essence of what we're doing is exactly what we're doing here. So for me, for this diet, this was one of the toughest that we had there. So going forward, there are other questions on ratios, there is impairment, there is accounting policies, and there are some other questions that I have here. We have spent 3 hours. We're going to stop here for today, and we would continue our revisions later. And all we're going to be doing is solving past questions together. That is how to pass this exam. You see, whatever I'm doing with you here, go and apply the same thing in every other of your courses. Even if you're writing 6 courses, We are writing 5 courses. And you're writing 4 courses. Just apply the same thing. You would pass. You will pass. But yeah, I'm solving it for you. And I'm intentionally doing this because I think it's more clearer for you, for most
Yeah.
of you, right? Not that you can't solve these things yourself, but now we are discussing it. It's clearer for you. And you can easily sit down and go and solve it yourself. Okay, so somebody is asking, how did we get 35,000? Can anybody help? How did we get 35,000?
Let's go back to the solution.
Yeah, this
And the
35.
35,000. So, in the last time we did cash flow, he explained that when you're looking at your opening balance, it's not just bank you look at. If you have overdraft, you would include it, and then short-term investments. So in this question now, we have bank and overdraft. I think the bank opening, I can't remember what the bank opening is. And when you have overdraft, your account is overdrawn. So you take it, you net it off what you have in the bank. Let's take it back to the question. So for bank, see that we have 40,000 for bank. And in our overdraft, we have 5,000. So you net that 5 up to 40. That's what gives us the 35,000 of the opening balance.
Okay, so I'm sure you now understand how we got at 35 now.
And then you
Okay.
apply the same thing for the closing.
Yes. All right, Palumi, thank you very much. So, guys, go and continue to revise, rest, revise, rest, revise. The aim is just to ensure that we're going to pass, and we're still going to solve more questions. So tomorrow we'll continue. I can just call you. Okay, let's do a question on impairment. Let's do a question on this. But I know that before the exam, I will have solved these past questions together with you. And the idea is not to start teaching you anything new right now. That is not the idea. The idea is for me to practice with you what I know you would likely find in your exams. And from our scanning of those 6 diets, we have a good idea of what will come out. So there's some things I really want us to solve together, especially those past questions, like EPS. We have to solve questions on EPS together. We'll pick some past questions, solve it together. You should have also revised it yourself. Income tax. You'll be shocked that you find it in front of you. IS 8, accounting policies, impairments. Okay, so maybe one of during the week I'll just let's do 1 hour. We'll just come, we'll solve some of these past questions, and especially also I would eventually still revise ratios with you guys. So of course, and before your exam, maybe next week Saturday, maybe next week Sunday, I will now sit down with you. I will now summarize all the accounting standards for you in a very simple way that you can write it down and be scanning through it even when you're about to enter the exam. The summary of all the standards like that would summarize everything. You have it, maybe 3 pages, 2 pages summary of all standards. I'll just be typing in one by one, capture it. Then the idea is this. None of you should fail this exam. So let's keep up the hard work. And remember, you're not writing only FR. Don't forget, whatever it is you're applying here, apply it to other ones. Give every one of them equal priority. Because if you pass FR and not pass the other one, you still remain in skills. So please, let's try to balance everything that you're doing and give them equal priority. So I'll see you guys later. For now, we have done 3 hours. Bye.
Thank you so much, Mr.
Thank you, sir. God
Thank you
bless
so
you.
much,
Thank you,
sir.
sir. Thank you, sir.
Enjoy your weekend.
Thank you, sir. God bless you.
We are grateful.
Thank you, sir. God bless you.